Today, we're going to look at a $10 billion Forex trade. That's right, $10 billion. All right, gather around, folks. I'm about to drop a story that's part hustle, part history lesson, and all about the Benjamins, or should I say, the British pound. This story stars George Soros, a man who didn't just break the Bank of England, he flat out embarrassed it, left it hanging like a kid who got picked last for dodgeball. Now, before we get into the nitty-gritty of this tale, let's rap about what Forex is, or the foreign exchange market. It's like the wild, wild west of financial markets, man. It's where people trade currencies, dollars for euros, yen for pounds, hey, you name it. But it ain't for the faint-hearted. You think day trading is crazy? Forex traders are like, hey, hold my beer. The Forex market is a 24-hour, 5-day-a-week circus of buying low and selling high. But wait, don't get all excited. Most Forex traders ain't driving Lamborghinis, nah. So the reality is like a beat up Nissan Altima with the "will trade for food" bumper sticker. So statistically speaking, 90% of retail Forex traders lose money. That's right. They enter the game thinking they'll be like the next Jordan Belfort, but end up more like Humpty Dumpty, falling off a wall of debt, you feel me? Alright, so back to the man of the hour, George Soros. This dude was born in Budapest, Hungary in 1930. He survived World War II and then bolted for London. He worked as a waiter and a railway porter to get himself through school. That's right, my man hustled his way through the London School of Economics. George was on that started from the bottom, now we here grind before Drake even thought about rapping. After cutting his teeth at a few financial firms, Soros started his own hedge fund called Double Eagle Fund for Bleichroger in 1969 with a modest $4 million. Now fast forward to 1992 and Soros is eyeing the bank in England like a lion eyeing a gazelle with a limp. It was the summer of 1992 when Soros began building a short position on the pound. According to his colleagues, he carried a $1.5 billion short position for most of the summer. The British pound was in a fragile position, tied up in a system that was kind of like an old marriage. Everybody just staying together for the sake of the kids, but nobody was happy. German officials also made a public statement that realignment within the ERM might be possible in mid-September. Once he got news, he used his hedge fund, Quantum Fund, to borrow billions of pounds from various banks and sell them for other currencies, such as German marks or US dollars. Now this created a huge demand for other currencies and huge supply of pounds, which drove the value down of the pound in the market. So George Soros thought, hey, why don't I just give it a little push? And a push he did with a bet of $10 billion. Yeah, you heard me, billion with a B. He shorted the pound. That's like walking in a casino, pushing all your chips in the middle of the table and saying, I'm going all in. Except Soros didn't flop. When currency traders and money managers noticed Soros built a massive short position against the sterling worth 10 billion pounds, they start thinking, nah, hey Jared, hey, this guy knows something. Otherwise he wouldn't push this much. So other currency speculators and money managers also joined the ride and they started shorting the pound. So you know what happened next? On the morning of September 16th, 1992, a day known as Black Wednesday, the Bank of England waved the white flag. The British government started buying 1 billion pounds so it could not lose its value, but Soros alone had nearly sold 10 billion pounds in the open market. They couldn't keep their currency propped up. So guess what? Soros made a whopping $1.5 billion in a single day, and the Bank of England lost $3.3 billion. A man didn't just break the Bank of England, he turned it into his own personal ATM. So the entire group cashed in big time. Jones Fund made $250 million, while Cobner's Caxton Corp rang the register to the tune of $300 million. But no one made more than Soros, who cleared $1.5 billion in that fateful month of September. He understood Europe's exchange rate mechanism and beat the system. Forex 101. Learn the game and then beat it. So after that, Soros became a legend in the Forex world. Like the LeBron James of currency trading, people started studying his books, his methods, his materials, and they probably even tried to get his haircut. So there you have it. A kid from Budapest who scraped plates together for tuition becomes a Wall Street wizard, schooling the Bank of England on their home turf. George showed that if you got the smarts and the guts, you can roll up on the establishment, snatch their lunch money, and walk away with $1 billion grin. So what's the moral of the story? Whether you're trading Forex or stocks or Pokemon cards, remember, be smart, be fearless, but all above, don't be the Bank of England in 92. Have some risk management, right? Hey, and let's talk about risk management for a second. So as you guys know, I just dropped a brand new book called Trade Like a Boss, right? And you can go ahead and just click the link in the bio if you want to go ahead and access that. It's a book on risk management that'll help traders always just access greater information so you can move, grow, and go to that next level. Now, can someone please pass the mic to the 90% of Forex traders who need to hear this tale of triumph and maybe, just maybe, get a clue? Peace.